Hi, it's Payam here from Niche. Hope everybody is well. In this video, we're going to talk about deposits. Everything to do with deposits and mortgages. This subject is getting more and more complicated because there are so many routes to getting a deposit, and the bank of mum and dad. It could be gifted equity from your vendors, it could be loan arrangements, who can make the gift, what if it's coming from overseas, what are the rules around having savings, for example. What about digital currency, things like crypto? There are so many different ways people are now trying to get help to purchase properties because properties are so expensive, and the need to have that deposit. So I think it's a good point. What I'll do is I'll put a chart underneath this video in the description whereby you can just click on the various sort of aspects of deposits. So let's go into it, and hopefully you'll find it useful. If you've got any questions, you can obviously leave your comments below, and I will come back to every single person that leaves the comments below. But yes, let's get into deposits and mortgages. Okay, so when it comes to deposits, it would be nice if you had all the deposit yourselves. But in many, many cases, in fact, the Bank of Mum and Dad, for example, is the third biggest lender in the country. So in most cases, certainly when it comes to first-time buyers, but now next-time buyers, a gifted deposit is required and as part of the deal. So there are lots of rules, and different lenders have got different rules around gifted deposits. So I'm going to go through bit by bit on a chart of what these rules are and what you require, really, whether you're going to go down the mortgage broker route or whether you're going to try to do this directly. Hopefully this will give you an insight in the sort of checks that we have to do as mortgage brokers that are regulated by the Financial Conduct Authority. Also, the lenders, as well as the conveyancers, the solicitors that are dealing with the transaction. So let's get into it. The first one is crypto. Now, historically, this was a big taboo sort of subject whereby people had money in, let's say, Bitcoin, for example, or Ether, or one of these sort of digital currencies, okay? And the lenders were a big no. However, as large platforms have now come about, like crypto.com, like Coinbase, we're seeing a more legitimization of the crypto asset being used as deposit. Now, not all lenders will take them. There's only a few lenders, but there are high street lenders that will accept crypto. And ultimately, it comes down to source of funds and how that fund was built up. In simple terms, when you're dealing with crypto, they want to make sure where it is, where it went in. So they want to see, okay, if you put £5,000 on Coinbase, say 2 years ago, and now it's £10,000, they want to see that progression. So they want to see the transaction going into crypto, the crypto account. They then want to see whether you're doing regular savings within that account. So they want to see the audit trail of where the original funds were. So was it your own money? Was it in your bank account? Where did it come from? Oh yeah, I pulled it out from my ISA because I was getting 3%. I've put it into crypto.com. Here's the transactions. Here are the bank statements. And essentially it's seen as a savings account, okay? Because you can identify clearly where the source of funds was coming from. Ultimately, with deposits, anything to do with deposits is to do with the build-up of funds. It's not the fact that you've got £10,000 in your bank account right now. It's how did you get that 10, 100, 150, 200k? Where did you get that from? Okay, and that's what everybody is tasked with. We, as the brokers, we're tasked with that, to answer that question. So are the lenders, so are the conveyancers. So we've all got to be happy that we have identified the original source of funds. So that's what it is. So can it be used? Yes, but this is what's required. Now, the biggest one, I would say, is gifted deposits from family members, right? So you've got two branches of lenders. You've got pretty much all lenders will accept blood relations, mother, father, brother, sister, grandparents, okay? So they will accept that as a gifted deposit. And the standard rule for gifted deposit is a gifted letter, which we've got a template of, and many lenders have got their own templates. So a gifted letter signed by the person who essentially says, I'm so-and-so, I'm gifting my son, my daughter, £50,000. It's an outright gift, and I don't want that money back. So essentially the lender knows that there is no comebacks, there's no charge. If they stop paying their mortgage, no one's going to pop out and go, actually, I own 20% of this property. So it's a letter. They also need to prove who they are. So a proof of ID. So, I don't know, photocopy of passport, certified, and we'll talk about certification, and an audit trail of where that money's come from. So if it's been in your savings account, typically 3 months savings account. Now we would ask for that to be certified, and that could be certified either by us if they can send it through to us, or the post office, or a solicitor, or an accountant. So we have identified, yep, we're getting £50,000. It's from the mother's savings account or the father's savings account, or it's from a proceeds of a sale or a refinance, whatever it is, the source of funds. Here's 3 months bank statements to show that the money hasn't been dumped in just before a mortgage and now it's been given to you. So we can show that there is an audit trail of where that gift's come from. Now, pretty much all lenders will accept that. Okay. What happens if it's a non-family member? Now, that could be a friend. That could be not a family member, but not a close family member. There are a few lenders that will do uncle and aunts, for example. But how do you prove someone's your uncle if they don't have the same surname as you? That gets very complicated. So for those type of lenders, there are a batch of, for those type of clients, there are a batch of lenders that will accept a gift from essentially a friend. It could be a family friend. It could be a distant relative, but it's essentially a friend, okay? And they will accept that. Exactly the same rules apply, right? So the gifted letter, proof of ID, proof of address, and so forth. So the lenders, we will obviously identify who those lenders are. And obviously it's not just about the gift, it's about the suitability of the mortgage and the pricing and the rates and affordability, all of those things. But there are lenders that will accept gifts from non-blood relation family members, right? What happens if the client is getting a gift from abroad? I deal with a lot of foreign nationals, for example. I deal with a lot of IT consultants that are living and working here, but they're originating countries somewhere else. They're on a visa, they're on a work visa. Or it could be, mum and dad are now living in Spain or in Germany or in the US. That is very much dependent on the lender and the conveyancers. Typically what I would say is, if it's a safe country, so within Europe, United States, seen as a safe country, I would say 6 months bank statements from the person who's providing the gift, gifted letter, proof of ID, proof of address. So that's really it. And normally the money has to be sitting in the UK account. So they must have made that transfer. But obviously we're going to need that audit trail of that happening. So that's from a gift. There are other countries that are, I suppose, medium risk countries. So let's say maybe India and countries around that. Again, that's acceptable as long as there's a translation potentially in place, if there's a bank statement, or we can actually see where the deposits come from. So again, a little bit more complicated. You still need the documentation. The solicitor really needs to be comfortable with that as well. So it does happen, and it is, it's acceptable, and we've done many cases around this. Where it gets complicated is, for example, my parents, originally I was born in Iran, sanctioned country, Russia, sanctioned country, or high-risk countries, Nigeria, a lot of the African countries. Pakistan is potentially a high-risk country. So there's a lot of higher-risk countries. Now, when you're dealing with sanctioned countries, I would say it's a big no-no. Historically, we used to be able to do sort of countries like that, but as sanctions got tougher and tougher and tougher, Ukraine, not so much Ukraine, but again, money laundering is a high-risk country, and it's to do with money laundering and the stability of the financial services, really. So it's a big no-no. If you, for example, selling a property in Iran and you want to bring that money over and you want to go through it, and yes, you can bring that money legitimately, but there are problems around auditability of that fund. Okay, and I think solicitors are very nervous, and specifically around solicitors and us, we're very nervous because it's very hard to track those funds. So sanctioned countries is a big problem, and I think, if you could potentially go down the other route, whereby you could probably ask for family, friends, people that are in a safe country to give you that gift, rather than bring that money across from abroad, because it's an absolute nightmare to deal with, and lenders will just do not like it. Right, loan agreements. Okay, so another one that I get a lot is, okay, my mum and dad, I'm getting married. Okay, my mum and dad are going to loan me £50,000. but it's a loan. It's not a gift. Okay, so that you can get a gift or you can get a loan. Remember, most of those things we've talked about, it's an outright gift and I've got no interest in the property. In this scenario, it's a loan. No, I'm giving you £50,000, but I want that money back. You're going to pay me that back. If there's a loan agreement, so it's acceptable as long as that some lenders will take that into affordability if you've got to pay that loan back. So if you're going to pay £100 a month, then you're going to essentially take that into affordability. And also, there are lenders, many lenders will not accept it, but there are a few lenders that will allow a loan and they will allow a second charge to go on the property. Now, I'll give you an example. A second charge is essentially if you sell the property, let's say I get married and divorced with my missus and my mum's giving me £50,000. That's another way of protecting her involvement into the transaction because she's put a charge on the property. So when the property is sold, she gets her money back. So there's a lot of protection, and let's be honest, guys, there's a lot of divorces going around. So if you can protect yourself, and if that's the sort of arrangement that you would want, obviously you get legal advice, but there are lenders that will accept a loan arrangement and not just a full-on gifted deposit. Another one is gifted equity. We get a lot of this, right? So mum and dad, this is a perfect example. Mum and dad are too old to get a mortgage. Daughter and son still live in the property. Mum and dad will gift the property to daughter and son, but they're going to remain in the property. Now, many lenders will do it if they were going to move out, they were going to sell up and go somewhere else. But there are lenders that will allow you to essentially get the property from your mum and dad, get it gifted. Say it's worth 700 and you're going to buy it for 350,000. There's 350k mortgage on it. You would essentially get the difference as a equity, gifted equity, and mum and dad are still allowed to live in that property, but the property will transfer into your names and you're responsible for the mortgage. So that's a way that happens between family. Now, that's all great, but what happens if you want to buy your own property? You're trying to help out your parents. Well, you're stuck because you've got a mortgage on your head. What happens if your sister gets married or you get married and you want to go off? Well, you're going to get this property is your name, and it's a residential property, so you can't offset any rent or affordability. So it's not just about doability. Yes, I'm just talking about the criteria, but you've got to look at the overall picture and the long-term consequences of these deals, okay? So you can do gifted equity and you can get gifted equity from parents and they can remain in that property. Obviously, you could do gifted equity on buy-to-lets as well. So mum and dad are going to offload some of their buy-to-lets and you're going to get the equity. They're going to transfer the buy-to-let mortgage to you. And depending on whether you're going to go down the limited company route or personal route, there are options around that. Another one is vendor gifted equity. So you're a tenant, your landlord is now going to sell you their property, okay? So you know the property, you know what the deal is. The tenant may be giving, the landlord may give you a discount. Well, up to 5%, there are lenders, and some lenders more, that will allow you to use that discount as the deposit, okay, as long as you're buying it from your vendor. So, the landlord. So again, that's called the vendor gifted equity or a landlord gifted equity. So that's possible, and there are many lenders that will allow you to do that. So that's quite a big one at the moment, and also quite common in the new build. There are, a lot of the times what they do is they'll give you some incentives to buy that overpriced new build property. So it could be a gifted, a discount on the purchase price. It could be they'll be incentivizing the deal by paying stamp duty, paying for furniture, other incentives. General rule is with a lot of lenders, as long as it's up to 5% of the value, then they should be okay. And there are plenty of lenders around that. Let's have a look. Right, so let's now talk about your typical gifted equity case and some of the problems around it, right? So gifted deposit case. Ultimately, it's really, if you explain to the broker, I've just told you about 8 different ways these gifts are happening and they're coming to you guys. Ultimately, it's about explaining and saying, right, this is how I'm getting my money and this is where I'm going to have my money. So when do you need? Often you're going to need the money before you go to full application. Not necessarily at agreement in principle, because in principle, you're telling the lenders you're going to do this, okay? But at application, generally, the proof of deposits, proof of income, all of that stuff gets sent to the lender. Now, a lot of the times, the lender generally just wants to see a, if a lot of people go directly, say if they go directly to the lender just wants to see a gifted deposit template filled. But the reality is, if you don't do these things behind the scenes and you don't get your documentation, you're never going to know if there's a problem. And that's what using a good broker or a good conveyancer is going to be. That's the difference, because we're going to check these things to make sure they still fits within the policy. Okay, we're going to check the gifted letters. We're going to look at the certification. We're going to see if there's a problem, if there's an audit trail problem. These are the things that people get caught up on. Often I tell my clients, look, we're brokers, and there are lots of brokers out there. There are fantastic brokers out there. But often what you will find is it's not about who can give you a 1% or 0.01% better rate and, oh yeah, this saves me £3 a month. It's about the process, it's about the knowledge, and it's about going through the process in a smooth way. You may, often if there's problems, there's back and forth with the lender. You don't want to have the back and forth with the lender because it could add timeline to your offer and you're under pressure for the estate agent. You want this stuff to be dealt with, and you want it dealt with efficiently. So these are the rules around gifted deposits. They are always changing. There are always additions, especially when you're dealing with foreign nationals or any other types of things that are a little bit more complicated. Obviously, there's a lot of changes with stamp duty as of tomorrow. I believe stamp duty is obviously changing. So, people often, maybe sometimes you thought you didn't need a deposit and you may need a deposit. So if that's the case, if it's a borderline case, it's always good to have that as a backup. It's always good to say, I could ask my dad for £10,000. What do I need if that is the case? Or let's put it on file just in case, Payam. Okay. So those are the rules. Hopefully you found this useful. If you've got any questions around deposits as a rule, put them down there and I'll try to answer them. I can't give advice. This is not an advice platform. This is really an information platform to do with mortgages and property finance in general. Let me know what you think and I'll catch you on the next one. Take care. All the best. The content of this video does not constitute giving advice. It's purely for information purposes. All cases should be discussed with a professional mortgage broker. As a mortgage is secured against your home or property, it could be repossessed if you do not keep up mortgage payments. Niche advice is authorized and regulated by the Financial Conduct Authority.